weekend all. Ira Epstein, and here we are with your weekly edition of your financial market wrap-up. And this wrap-up is for Friday, and we're at the 22nd of September, 2023. Well, interesting time, right? UAW hit another 38 plants today. I haven't seen anything with the Writers Guild that they've settled any strikes yet. Good news out of Australia. I think there's a deal done there between Chevron and the unions for liquid natural gas refineries to stay open. It's going to be a rough week because we now have to deal with the fact that we have no game plan for the budget. We could close down. We've done it before. You don't panic. What happens is you go into a few days where things aren't operational, and then suddenly they are operational. Most times you don't even know what's going on other than a couple of places aren't there. They furlough federal employees. They'll get paid for the days they were furloughed typically, and then they come right back. That's how you have to look at what's going to go on, and that'll be what the headlines are all week long. Because in all honesty, that's exactly what Congress wants. This is their 15 minutes of fame. This is where they're getting their votes. Look at how rough I was. Come vote for me in November. Blah, blah, blah. This is how these things work. The sad part is we're doing nothing under the past several administrations. You heard what I just said. To take care of the budget deficit. And somewhere along the line, you can't just have this spend, including the Trump times. You can't keep doing that. Now, admittedly, COVID shook the world up and different things happened than ever before, and that's how it goes, all right? You have to rescue and keep the patient alive in order to cure the patient down the road, and that's basically what happened, but we're paying for it, and that's what's going on. So as you take a look, amazingly, the gold market came back to life, not collapsing. Silver market, same thing, in face of the dollar. But you did get a bit of a correction, a little bit of a reprieve, in that yields backed off a little bit. So those 10 years went from the over 4.5, backing off into the 4.3, 4.4 area. This is good news, but doesn't mean it's not going on to 5%. You haven't convinced anybody of that. On the energy market, very much a mixed bag right here. You were down in the Brent, but you're up in the crude, and you lost some embedded readings. You got to be careful. Now, on the weekly charts, what we do in this program is we're going to look at everything typically on a weekly, but I start you off with the monthly, and it's important because one of the things we had talked about is the month going to be a down month. If you'll recall, I did a special report, it got to be 4 to 6 weeks ago, on the stock indices. And in the report, I know I was talking September down, then flattening out ideally in October into a Santa Claus rally period. Well, I'm getting what I want. You're down for the month 3.43%. When we look at a weekly chart, this was supposed to be one of the weakest, if not the weakest week of the year. Was it? No. There's another week where you had over 4.5% decline. It's a good one. You had a good being that the seasonals are working. You were down 2.91%. Okay. When we just look at the market, you see how that decline extended. And by the way, if you come with me right here, you can see this faint line. This is where you were starting off the month. So you're getting a sizable decline for the whole month. No question about that. When we take a look at the swing lines, you've got a pattern of lower highs, lower lows. When you look at to make up a trend, one of the first things you learn is an uptrend's higher lows, higher highs. A bear trend's lower highs, lower lows, and no trend will have a higher high and a lower low, or a lower low and a higher high. But they'll be out of sync with each other. They don't act as a stepping ladder. This does. So in order to tell you that the market's going to lose the uptrend, it's quite simple. You'd have to get back over 45.1775 on this pattern. What else? For the first time in a long time, you're back underneath the 18-week average of closes. You haven't done that since back here, right in the zone at the end of March. So that's a heck of a run, and now you're finally back under it. Where might the market go? Well, if the market stays in this downtrend and people keep pushing and going, oh, we got the strike now, even more workers out, we have no budget, blah, blah, blah. Interest rates, even though they were today a correction, they've been in a big downtrend. Well, one number that you could go, you always look to just see the numbers. Let's round this to 4207. And the Bollinger Band is more likely, and that's above that number, and it'll jump again come Monday morning when we reopen. Why? Well, let me just show you what it does. If I step back on the chart here, there's 4240. The week before, the number's 4207, 4153. So let's call it about 40 points, 50 points at a shot. So that's probably going to get up closer to the 4280, 4290 level early on. It'll adjust from there. But it's a guesstimate, and that's what I'm looking for. Where should be the resistance if we just turn around early in the week and start fighting to the upside? I'm going to say the 44.38 zone, the 18-week average of closes. And momentum is still pointing down. Any reading under 30 I define as oversold. You're not there. You have a downward momentum. You're under the 18-week average, so the bias is down. You're looking now for sell configurations. When you're over the 18-week average, you're looking for buys. Tell me that if you were overall following that, you'd be all right. I think you would have been. So now we're in a transition period where this will be the resistance, and the pros will not want to see, in my opinion, it get over the 45.17 level. That's a big amount of money from where it's at, but this is school time, not trade time that we talk right here. Trade time is when you go to my subscriber videos in the morning. And if you're watching me on YouTube, you see a blue thing. You can subscribe on YouTube. I think you're better off doing it on our website. You get a better value for the dollar. But when you do that, that is trade time. That's where I'm saying I give you the specific enter here. Get out there. Do this, do that. And I track the trade with you till you get out of it. So I think you'll like what it is. I do it both on a weekly and on a daily basis. But in here, I'm looking for the resistance in the Dow at 35,041. It's the same thing. The trend is down. Now the bias is down. If we come with me, you weren't until the June timeframe, May, June, right here is when you got over that 18-week average. And this is the very first move where you've closed back under it. 1 week doesn't set up a trend that you'll stay under it, but the bias did shift. The trend is down. You have lower highs, lower lows, and you're here. Also, you have a huge outside week down. If you've taken my outside week course, you learn instantly what this is. If you take this high out this week, you could be going back up here. As long as you don't, it's a continuation pattern, and the market, in theory, should be coming down. There's a time frame on it as well. I'm not going to give you the whole course here. When you look at the NASDAQ, even though the NASDAQ played around on a daily basis, doesn't matter. You're at the very bottom of the range. Lower highs, lower lows, under the 18-week average, momentum pointing down. So far, all these stock indices are in downtrends and not oversold. Here's the oversold one. You're now instantly down here. Look at the difference. Any reading under 30, I consider oversold. You got a 15 reading. You're underneath, and you did this last week. You got underneath even the 200-week average. You did actually the past 2 weeks prior to this, and now the market's let go. So when I keep hearing people saying, oh, they want to buy the Russell, I keep going, why? Why does anybody want to buy the weakest of something? You want to sell short the weakest. You want to buy the strongest of something. Most people don't get that, and that's why they step over themselves, in my opinion. And it's been my experience in 54 years of this. That's what they try to do. I remember it. Oh, if this part of the complex didn't go, why don't we buy that? Well, there's a reason it's weak. I don't know what to tell you more than that. Notice how the resistance also showed up right here in this market. When we come to the 5-year notes, this is an area that you probably, on a weekly basis, don't want to start pushing the market too much. Now, on the daily, it's still bearish. I had told traders trade on that, and I'll be adjusting with that come Monday morning. But right now, trend down, bias down, embedded. There's no magic. It should not close underneath the lower Bollinger Band. It only stays under it 5% of the time, so it can do it. But if you'll take a look, this market has a pretty good track record if it gets underneath of moving to the right-hand side fairly fast. Could it push on the band? Absolutely. And that's what I think is going to happen. You're just going to keep pushing on that band to lower levels. 10-year note, the identical same thing. Embedded readings. This is super bearish work, guys. This doesn't mean these markets are bouncing much. Until this is all left behind you and you lose the embedded readings, don't even think of getting, in my opinion, friendly these markets. You want to use rallies to get short. That would be my advice. You need not take it. In the dollar index, will we embed or just stay overbought? Overbought's when you have both numbers over 80, but you need to lock them in. Locking them means that you have to get several weeks in a row where they're both over 80. You don't have it. You could this coming week. Then the game changes again. So right now, I'll view the market as overbought. I think the pros are taking profit because it's overbought between here and the Bollinger Band. They've been doing that. And it's the flip-flop in the euro where it's very oversold. I think the first area the pros stepped out was the 100-week average. If it slips there, great. But I don't think you're going to get them pressing on the euro when you're in oversold territory and not embedded. In the Canadian dollar, this market is saying, I don't want to stay down. Doesn't mean it's going up. It's come back to fight a line at the red line. I call that red line the line in the sand. Why? From that line, if you're over it, I have a bullish bias. Under it, I have a bearish bias. It's my line in the sand. It's right now no more than a bear market rally. Got up to that average, installed out there, so the bias is still down. In the yen, Japanese government today did nothing. So most banks did a rate hike. We didn't. European Central Bank did. Sweden, Norway did. Turkey did. I can go on the list of the banks, all right? Japan didn't. And Japan's the outlier. They're keeping negative interest rates. They're still a carry currency, and the market's paying attention. But for the week, it was up a percentage point, all right? It's embedded. There's a way that I'll be telling my traders on a weekly chart to go short. I won't share it with you here. In Bitcoin, a lot of resistance now. Take a look at the 200-day week average and the 100-week average, which is up here, and where the 18-week is. This is your big resistance. The 18-week and the gray line, the 200-week. They're telling you this market on this rally, the pros are still on the bear side. What bothers me is you're not embedded. You're oversold. I don't tell my clients that they should deploy money typically in oversold conditions. Then we get to the differential between Brent and WTI, which is narrowed in, and it's staying narrowed in. So whatever Brent's doing, there's a greater correlation until that breaks. Brent will lead the parade because OPEC Plus is the one squeezing the market by not putting supply out. Our rig count today, according to Baker Hughes, I'm not seeing deploying of rigs. We lost 11. That's a lot of rigs. So we're losing these rigs. The big boys, remember what I told you, Biden can go hat in hand, produce more, do more. They're going to look at him, yes, Mr. President, as soon as he's out of the room. That jerk. And why are they going to say that? Because he doesn't have an energy policy. He doesn't help them expand. He contracts. He takes away the leases. The courts just overturned them, by the way, in the Gulf of Mexico. There's an auction coming up, and they said their policy was wrong. It's a bigger piece of property. He's anti-energy. And then when he needs it for a vote, he comes in and says, help me out, guys. So as I look, and by the way, did he do a good job? Remember, we were $72 to $67 a barrel. He promised in October he was going to buy SPR oil. He never did it. When it was there, he and his energy secretary found a way to not do it. Yes, they suddenly told you out of left field, oh, maintenance has got to go on in our caverns. And then when the public, guys like me, started pushing back through the press, talking about it, oh, we will buy now. There is no energy policy in America except everything is anti-energy. That is your policy. So you can see we're running up here. You can see how the market is sitting sideways right now through there. So very bullish. Yes, you will get corrections. Nothing grows straight to the sky. But could this market crack the $100 a barrel area? That's what the Saudis want. Their job is to now guide the market between $90 and $100. That's what I believe their goal is here. And that fits in with their budget. They'll let inflation continue to run. If you believe American inflation is going back to 2%, you're dreaming. We're not going to see 2% inflation anytime soon. I cannot say we'll never see it, but not anytime soon. In order to get there, we need a crash in the markets. Does it look to you like the economy's weak? Interest rates are going up for a reason. There's demand for the money. Guess who's taking all that money with it? The Treasury. Again, no game plan, all right? We need $1 trillion, so we'll just every day put out $100 billion here, $100 billion there. We'll pay anything to soak the money in because people don't want to buy our stuff right now. They got their own problems at home. They're the point. So you get the rate high enough, you can entice them to buy. Unfortunately, it doesn't get rid of the debt. It just services it. Remember that. WTI oil. Still running to the upside. Embedded readings. Breaks, in my opinion, will get bought in this. Gasoline. No, I don't like the gasoline. Who drives a lot in the wintertime? No. I'd rather be talking to you that we're going to talk the heating oil. I keep saying I'm going to change that, and I keep forgetting to do it. I will get it done. I just get too busy. Now, how do you keep up with my exact trade recommendations? Well, you come in and you can get the Spider, the futures ETF. I have a package where there's two of them together. One's just the ETF, the other's the futures. So there's 3 ways to do it. You can try it inexpensive as can be, $7.95, $8.95 for a month. Come on. You're going to get 22 videos for the month. Specific, buy here, sell there, not writing, chart reasons in front of you, video, all put together. Here are the reasons. I'm not asking you to follow it. Not in any manner at all. I'm asking for you to look at it and apply it to your own thoughts in the market, your own chart analysis, and see if it either solidifies it or gives you a reason for pause that maybe, that's the other side of the argument. That's where it fits in. I cover all this in the futures and very similar, including a lot of stocks in the ETF. So you get roughly between the two about 80 charts a day. Give you a lot of analysis. And there's something else. I did it again today. My subscribers can write me. Ira, I had one that wanted the symbol BA. What did I think of it? He wanted to write some calls. Immediately, I'm out there giving him, either I'll create a video for him and show him it, or I'll write him and say, I think you're missing this. And today we were talking where the Bollinger Band bottom was, and I gave him some ideas. That's what you get with it. So, go give it a try. IraEpstein.com. You can click up here. It'll take you right to the area. It's under the word research. You have a great weekend.